US stocks remained volatile on Monday, with the Nasdaq 100 reversing off its lows to finish the day up. This was driven by continuing volatility in star chipmaker NVDA, which saw more whipsawing when markets opened on Sunday night. NVDA was also volatile on Friday, which had an intraday reversal that wiped $250 billion off its market cap. Meta was the underperformer, however, among the Mag 7, driven by negative press. Firstly, comments by Donald Trump are likely to have sparked some negative sentiment after he suggested banning TikTok would make Meta stronger and more powerful, which he considers the enemy of the people. Additionally, reports of fraud linked to Facebook Marketplace have substantially increased. TSB Bank reported a jump in fraud in 2023, attributing 60% of that rise to Facebook Marketplace. Tuesday we had the latest inflation numbers, which pretty much came in line with estimates at 3.2% year on year. That was enough to set off the rally in the Nasdaq 100. The usual winners this year continued to outperform, with NVIDIA and Meta leading the way. Oracle was also an outperformer after beating on earnings. Talk about one old favorite from the dot-com bubble era, whilst the new AI favorite NVIDIA also outperformed on the same day. From a technical perspective, price pushed back above this key trendline in black, after dropping below it overnight on Sunday when markets reopened. Price held this blue trendline as support on Monday, with Oracle's better than expected earnings and inline CPI report providing the impetus for the rally. US stocks fell on Wednesday, driven by a fall in NVIDIA and Tesla. Now that's the tale of two stories right here. NVIDIA is likely to be profit-taking following its impressive run, whilst Tesla has been a major underperformer amongst the Mag 7 and continues its losing streak, with Wells Fargo downgrading the stock, highlighting the waning impact of price cuts on demand. You can see from this chart how bad of a year the EV maker is having compared to outperformers like NVIDIA and Meta. Price traded below the key trendline in black on Thursday after hotter than expected producer prices report hit tech stocks, which saw yields rise. Producer prices for Feb came in at 0.6%, double the number expected by analysts. Traders will have to rethink the timing of rate cuts if inflation remains sticky. There are signs from this week's number that it will remain sticky. Today we're seeing a continuation of selling, with price now below the medium-term trendline in blue. Closing the week below this would see further selling into next week. I go back to this long-term chart we've seen previously. We're at a major turning point, with price holding this long-term trend that stretches back to the dot-com bubble. The weekly chart here shows price tagging this major trend as resistance this week, and we're likely to see price head lower now over the coming weeks. 17,510 is the likely target. Should price breach this level, the selling is likely to accelerate. Next week, it's all about the central bankers, with the Bank of Japan up first, followed by the Fed on Wednesday and the Bank of England on Thursday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.